there's something broken with the economy, and the stats are just not picking it up. Like I said, you go in the woods, there's no birds, there's no squirrels. What's going on here? There are no truck drivers. No one can get workers, right? And you say, well, that's a roaring economy. No, it's a completely malfunctioning economy.
This week's specials with Miles Franklin Precious Metal Investments. 100 ounce and kilo silver bars for only $2.69 over spot, and 1 ounce gold bars from the Rand Refinery for only $65 over spot. Call us at 1-888-81-LIBERTY. That's 1-888-815-4237. Hey everyone, this is Elijah K. Johnson, and with us today is Dave Collum. He is an Austrian economist and also actually a chemistry professor. Dave, thank you so much for joining us today.
Yeah, glad to be here. I wouldn't call myself an Austrian economist, but a fan of Austrian economics.
Definitely. And can you tell us a little bit about that story, how you became a fan?
Well, in the late 90s, I was a tech bull. I know there's people out there in the Twitter sphere who cannot fathom that being the case, but I was. And so I was buying Dell and WorldCom and all these stocks. I was getting fantastic gains. And then I kind of woke up and I started paying attention to the craziness of the market. And that naturally led me to some of the smart guys who were talking about the tech bubble. And they kind of had a natural Austrian inclination. They were the guys who said, look, when you pump up a market like this, you pay dearly. And so the basic principle of Austrian economics is if you go deeply into debt, you're going to have a credit-based bust, right? You can't have a boom without the bust. It's that simple.
I think that's so key. Yeah. And what we see happening right now, I mean, people have been talking about this we've been reporting on this for about a decade now with how much debt the U.S. is accumulating and how much money printing is going on at the Federal Reserve. It's just a complete shift really since 2008 of a whole new way of running monetary policy, being as accommodative as possible. And we're continuing to see that even though we just recently saw the Fed promise a taper, we're still going to be creating money at over $100 billion per month. And we're seeing this have an impact finally. In this year, we've seen about 5% inflation. Your perspective on inflation currently?
Well, I'd say you're an optimist calling it 5%. Those are the official inflation numbers. I would say it's running higher. I just finished typing a sentence that ended, the Fed is full of idiots. And so I think that they're oblivious. They've been buying mortgage-backed securities while there's this massive housing bubble brewing. Blackstone, BlackRock, all those guys are buying residential housing with margin at 0.05% interest rate. The Fed's buying into that market by buying up mortgage-backed securities. It's just a complete and utter insanity.
The Fed buying mortgage-backed securities is causing at least a contributing factor for why we're seeing a housing bubble right now.
Well, it would have to be because as the mortgage-backed securities, as people buy up houses and take out debt to buy them, if the Fed scoops up that debt and gives them capital back, then they do it again, right? So if every time I accrue a debt, you pick up the tab for me, then yeah, I think so. I think you have to.
And you mentioned how you think saying inflation is 5% is kind of optimistic and that the real inflation rate is higher than that. What do you think is the real inflation rate and how are you calculating that?
Well, this year it's so sketchy because nothing's stable, right? So I happen to be caught in the middle of writing a big section on inflation because I think it's one of the topics of the year. And the problem is you've got things that are up, 300%, then you have food that's up some percent that's not 300%. I would say food inflation looks like it's a comfortable double-digit inflation. The housing market is just off the charts, as we just said. I think we're seeing a massive pickup in wage inflation, although it might not be showing up yet because they talk about it being a tight labor market, which makes no sense to me. As I said to someone this morning, actually, it would be like if you walked out in the woods and and there were no squirrels or birds. And you go, what's going on here? Well, I spent this morning talking to a trucker and said, where are all the truckers? Where are they, right? If they're not driving trucks, what are they doing, right? He said a number retired, stuff like that. But I would say the labor market is not tight. It's broken. It's completely broken. And so it's tight only because it's just not working. The supply demand curve for labor is broken. And but when you can get a job at Dunkin' Donuts without a resume for $17 an hour, there's a trucking firm in Texas that was so desperate to move apparently some very expensive goods, they paid their truckers $14,000 a week to drive the trucks. And it was emphasized that is not a typo, $650,000 annualized, right? And so you've got crazy situations like this, which trace to the lockdown. So if you lock down the entire economy and then you try to come out of it, you have all sorts of problems, which include if your GDP essentially drops to nothing in 2020, then to get back to normal in 1 year, your GDP in 2021 has to double, not double digit, has to double to get the GDP back that you missed in 2020. So, and it's not that big, but you get the idea. So we're playing catch up. This truck driver says it's going to take 3 to 5 years for the trucking industry to regain its equilibrium, in his opinion. So we're going to have a mess this winter. I'm hearing stories of guys in warehouses saying we're going to run out of stuff. So I'm a prepper at this point. So I think we broke the system. I think the Fed broke the system with its monetary policy. I think they enabled lockdowns in ways they shouldn't have. I think the government's gotten so used to spending trillions of dollars that inflation is also going bonkers. That speculative investments are soaring, right? The 2020 recession was not only the shortest, somehow technically it's still a recession. I don't know how, because it was so short. But it's the only one where corporate debt grew instead of dropped, right? Normally recessions blow out debt. They correct malinvestments. They correct bad loans. They cleanse the system. Nothing was cleansed in 2020. I think we're going to have a cleansing moment. I've gotten very dark. Okay, I used to be able to laugh at the human folly, say, "Oh, this is going to be funny when this happens." It's no longer funny, right? It's no longer easy to laugh at all. So, at some point, we're going to have, I think, a catastrophic period. I have a definition of a correction that basically is you have to significantly correct the price of the asset, and you have to significantly correct the price, the attitude of investors. And I would make the argument that investors haven't had their attitude adjusted since 1981. And it was the 67 to 81 bear market that ripped the soul out of investors in equities, when over a 14-year period, their inflation adjusted returns were minus 75%. Since then, investors have been taught no matter what you do, don't sell. No matter what you do, buy the dip. And there have been periods where it looked like you were going to pay a price. And I would argue that some investors may not have noticed that from 2000 to 2012, they made no money. So that should have adjusted attitudes, but I see no evidence it did. So I'm looking, based on valuation alone, I see a 60 to 70% correction based on attitude adjustment thrown in there and regression below the mean. I could imagine us doing 80 more. I think we got an awful period coming.
Now, you mentioned earlier about the trucking problems and the supply chain issues. We've had an insider from the trucking industry on talking a lot about that. And you mentioned how you are a prepper now. What does that really look like? What is your perspective on some prudent steps people should take to kind of prepare for further supply chain issues and higher inflation coming in the future?
Well, there's simple, almost stupid things. I just got snow tires. So instead of bringing my old snows in and getting them put on, I bought new snows. That is simultaneously an inflation hedging purchase. So I'm pre-buying, which means money velocity is picking up if others do things like that, right? As contractors pre-buy supplies, money velocity is picking up. But also, it also is an anticipation that maybe getting tires might be hard. The U.S. has never been in a period where we worried about not how much something will cost, but whether we can get it. So the question that I ask rhetorically is, what is the rate of inflation when the thing you want to buy is simply not available, right? How do you put that into your bean counting inflation numbers? And so I think the stories about real shortages this winter are credible. I don't know how to put a probability on it, but I don't intend to be caught completely flat-footed. So I do have a basement with a bunch of food. I do have goods that are durable that I know I'll eventually use. I have plenty of. I like that model actually. It's not just because of now, but I sort of lived that model for quite a while. Or I'd rather go to the basement than the store to get something, and so that makes it easier. I think wage inflation is not only taking off, but I have an odd view on wage inflation. I think we're going to see not only a massive increase in the activity of existing unions, but we're going to see a massive increase in unionization activity. And not only that, my dad was a management-based union negotiator. He was a contractor, but he also, as for free, as president of New York State Builders Exchange, negotiated with the mobsters for union contracts. And so I grew up in that world of management-favored economics. And I battled the unions at Cornell. We're trying to unionize our grad students. It was a bad idea. Not because of unions per se, but this particular unionization was a bad idea, and won. I am now of the mind to say that I think it's probably time that the workers get organized and start collective bargaining, because the system, they've been weak for a very long time. And so I think we've now overreacted in weakening labor. I think it's now time for labor to strengthen.
And if that does happen, I mean, obviously there is the argument, right, for higher wages, right? And people need that, but that will just trickle down, right? That's
the surreal part. The worker thinks they're making up yardage, and then they'll go to the store to buy the goods and services that the worker produced, and they'll cost more. So, and the Fed will say, oh, with wage inflation soaring, we have to step on, monetary policy. It's all of a sudden they'll whack the economy at some point, right, with their Fed-induced recessions, and which I'm not sure they have the spine to do now. I'm not sure what I think of the Fed cranking the economy up and down like a yo-yo. Well, actually, I am sure. I think the whole thing's stupid. But at this point, I'm not even sure what they should do, because they've now got a bomb they have to disarm. And there's some red flashing LED with a countdown clock, and they got to figure out which wire to cut. They don't know what to do. And I don't think they're qualified to know what to do. I think they're rudderless.
No, last time we had, well, the last couple of times we had major market crashes, if we look at 2008, and also during the beginning of the lockdowns and all of that with the COVID crisis, we saw precious metals fall as well, but then rebound quite significantly and outperform the stock market for a little while. Your perspective on that, do you think when this crash happens that precious metals will sell off? Do you still think precious metals are the place to be during this economic turmoil we're going to see in the future?
I have no idea. The more I know, the less I know. There's things that have happened that I wouldn't have thought even theoretically possible. So with all this money printing and all these bailouts and trillions of dollars flying around the planet, I would have, if you entered 2020, January 1st of 2020 with a crystal ball, and the crystal ball told you what would happen in 2020, you would have been completely and utterly rational to mortgage your house and take the proceeds and buy a bunch of put options and short the crap out of this market. And it would have been a no-brainer bet to say we are going to correct like crazy, and you would have lost everything in about 6 months. And so there's just no way to know. I was on a panel discussion with a bunch of real smart guys, and they were talking about the Fed's going to have to do this and this. I said, you're acting on the assumption they're rational. I don't buy the rational model anymore. I don't think there's anything the Fed has to do. I think there's stuff that I'd like to see them do. And I think there's stuff that using previous metrics, they would have to do. But I don't think this Fed is, I think this Fed is working without guardrails now. So I don't think you have any clue what the Fed's going to do. And I don't think anyone does.
In that sort of environment, then how do investors make decisions?
Throwing darts. You just have to kind of find the best worst idea, or worst best of the bad ideas. So I'm not sure gold's going to do well. The gold miners actually are pretty cheap to me on an absolute scale. I'm not a big fan of relative metrics. So when someone says this is cheap compared to this, I don't care. That doesn't make sense to me. But the miners actually have, sort of low PEs, good balance sheets, high dividends. I didn't believe that. It was only about 10 months ago when I was listening to Fred Hickey, where he pointed that out. So I like the gold miners. You got to be careful. If you look at equity valuations by decile, the bottom decile looks cheap. But compared to other bottom deciles, it's twofold above normal valuation. So when you have a market that drops to a PE from right now, I think it's ballpark. You'll find people say it's in the 20s. I don't think so. I think it's much higher. But if you have a market that cuts in half, all the deciles are going to cut in half to varying approximations. So I've bought some stuff this year, and I think I'll get hurt. I'm trying to trick the market into trying to hurt me.
In this environment, then it seems like maybe having a larger position, some people have talked about having a larger position in cash just to kind of hedge against kind of a market correction across markets. Your perspective on that?
Well, I do. So if I said anything to the contrary, that would be pretty hypocritical. But now the clock is ticking. So now they're destroying cash very quickly. So a large cash position was just an opportunity loss up until now. Although, again, things were worse than the official inflation statistics. So you were being hurt. Now holding cash, you're being gutted. And so I think there's probably some boomers who are looking at this going, I did the math on my retirement. And what I didn't account for was the fact that my annual expenses would be up 8-10%. And you can go through, you can destroy your retirement account pretty fast with an 8 to 10% hike in your expenditures. And so you're going to have to pull back. And what's that? Well, that's not stagflation. So I think we're going to see a lot of stagflation. I think the 67 to 81 is the best model.
Now, as we do see continued inflation, we're also seeing a good jobs report. And some people are saying, well, the economy is doing pretty well. So those fears of stagflation, shouldn't be taken seriously. Your perspective on that?
I think it's just complete garbage. There's something broken with the economy, and the stats are just not picking it up. Like I said, you go in the woods, there's no birds, there's no squirrels. What's going on here? There are no truck drivers. There are no one can get workers, right? And you say, well, that's a roaring economy. No, it's a completely malfunctioning economy, right? And I ask, where did your workers go? I ask this question, where are they? And no one seems to know. And I go, are they sitting at home playing Game Boy? What are they doing? I don't understand. And if someone can tell me, send me an email, tell me where all these workers are hiding. Now, maybe there's suggestions out there that they're living off their freebies that they collected during COVID, and that they've largely burned them down. And now they think they're going to go get a job, and we could end up with more chaos. Because, when there's, let's say 7 million job openings, you go, well, that's fantastic, right? That's a good sign. Well, what if 15 million people show up? So I have this one theory that maybe they're not releasing the workers into the workforce as fast as we think they should have, because they know there were too many. And so they kind of hid that little detail. I just don't believe the economy's healthy. I don't believe there's growth. I don't believe any of it. And I'm trying to document that belief, but it's complicated. The rising consumption rates, for example, they're just inflation. right? They're just people paying more. It's not that things are booming. It's that costs are soaring. Tell me something that's working. I couldn't even get one of the things that woke me up is I went to get the hydraulic lifts for the hatchback of my car, and they were hard to source. And we know that semiconductors are hard to source. The trucker this morning said they use these tanks for the gases that they ship around. He said, we can't source the tanks. We can't ship the tanks to get them refurbed, to get them back into service. Truckers are getting stuck at the docks in Los Angeles for 3 days at a time, trying to get the docks to load up their trucks. And there's, how can people call this a good economy? I think the economists need some sort of mood adjusting drugs. It just doesn't make sense to me.
That's such a good point. Yeah. With all the supply chain issues and the difficulty, even just getting basic parts and the shortage of workers. I mean, it does not seem like we have a healthy economy right now. David, it'll be great to continue to track this. It'd be great to have you back on soon to see where this is all heading. Before we let you go, did you want to share with the viewers any last thoughts you had and where people can find you online?
They can find me at Twitter. That's pretty much my only online presence, except when Zero Hedge picks up something. And I end up at Zero Hedge way too often, actually. I went to search Zero Hedge and got 61 hits. Search my name to see if I missed being talked about. 61 hits. That's a lot. But David B. Collum on Twitter. Final words. I've written about human folly for a dozen years now, and it's always fairly humorous. It's less humorous now. The theme of this year ultimately is going to be a rising, soaring authoritarianism. I think we're heading into a world that's very dark. I had a friend reach out to me after a podcast one day and said, "Are you okay?" And I said, "Yeah, I'm fine." And then I realized, no, I'm not fine. You want to see where we're heading? Look at China, look at Australia, look at New Zealand. Bad things are happening in the world right now, and no one's resisting it. The authorities seem to be willing to force us to do things against all logic, which means if nothing is making sense, it means you're working from the wrong model. That's what I've learned as a scientist. If it's not making sense, your model's wrong.
And I think the important thing is, how do we respond to that? And that's all, that's what this whole show is about, is being aware and prepared for what's coming. So David, thank you so much for joining us today once again, and God bless.
My pleasure.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.